Welcome back, everyone, to another session. So now let's begin, right? So the agenda for today, we'll be taking a quick look at the anatomy of a candlestick, right? Followed by a price action, the trading approaches which I personally use when I'm using, price action to trade. I'll look at my top three single, double, and triple candlestick patterns. Actually, for my double candlestick patterns, I might only look at two of them. Right. I'll show you how we can combine candlestick patterns with what we've learned so far. We look at the price action playbook that I recommend everyone to get. It's a free one that has been written by me, painstakingly written by me. So please go through it. And the last one is the TFA price action indicator I built. Right. So trust me, guys, I don't use this word lightly, but that it is the most advanced candlestick indicator ever. Right, just to give you an idea, right? The how it's like is that this is what goes into determining how what kind of candlestick patterns there are, right? So I really zoom in. I zoom in into each candlestick formation, right? I will look at what's the minimum size of the body, whether it's a bearish or bullish kind of candlestick. We use ATR multipliers to get a very good idea of like it's adaptive in that sense when you use the ATR multiplier, right? And we calculate every single thing. There are so many fields that is required that I couldn't code it into the indicator itself. I needed to make the indicator extract the values from an Excel sheet, right? So that is how advanced this price action indicator is. I've never released it to anyone before, so you guys will be the first to kind of see it and potentially get to use it. All right, exciting stuff there. Now, as usual, disclaimer, right? CFDs, complex instruments, they're really high risk, so do your own due diligence and research before trading. Now, always always remember that nothing said in this webinar today should be taken as financial advice, right? So please do your own research before trading. Once again, a little bit about me, right? I'm Desmond Leong, your host for today, right? I run the award-winning research firm Everest Fortune Group, and at the Forex Army is where I built my my bunch of indicators and EAs that I use to kind of take on the markets. Right, we have 2019 and 2020 best FX research and best equity research, and our team of CFA, CMT, and CFTA accredited traders. I kind of hate them as we take on the markets together. Right, so today I'll be your host. I'll be your host, and I will do my best to teach everyone how we can use price action, and candlestick patterns in your trading. Okay, now remember. If you have attended the previous two webinars in this Go Live in 30 Days series, you know that we have absolutely no time to wait for questions at the end of each webinar, right? So what I encourage you to do is when you have questions, just send them through straight away. Okay, now let's begin. Okay, the anatomy of a candlestick, right? I just want to explain this really quickly to you guys. To me, it's important that we get our foundation correct, right? The anatomy of a candlestick, you usually see green and red candlesticks. It can be white and black, depending on the color. But all you need to know about the anatomy of a candlestick is that this is what we call the open price. Now, when price is open here, right, it could go all the way down to here, and then it come back up here. Then it can go all the way up to here, the high price, and all the way down here, right? And this is where, if the close price is above the open price, right, as you can see over here, that is where we get this little green kind of, so-called a bullish candlestick, right? So when I'm talking about it, when I'm referring to the candlesticks later, this is what I call the body, okay? The body is this thing here. The body is not the entire candlestick. The body is this part here, okay? The body is this part here. Okay, can't really see it, but yeah, this is the body. This is what we call the upper wick or the top wick, and this is what we call the lower wick, right? The beauty of this candlestick is that it tells you so much of just on one single candlestick. You can you can see so much emotions in it. You know, you can understand it so much better. You can understand what the markets are saying just with a single candlestick, right? So I hope no one has any questions on what candlesticks are, right? But if you have questions, just shoot them through, right? And what we're doing next is we'll be going to the different ways we're going to use candlesticks to trade. Okay, we got a question from Milan. We're operating close. No, Milan, don't worry. There are no dumb questions. The only dumb questions are the questions you don't ask, right? But bullish do you have a bullish candlestick without an upper wick, then it close on its high, right? Yes, if there's a candlestick, right? If there's a candlestick which doesn't have an upper wick here, right? It means that, and it is a bullish candlestick, it means that it closed right on the high. So the high price is the same as the close price, right? So if you see candlesticks without that little wick on top, that's what it means. All right. Gerard, yeah, Gerard's asking why there are wicks and bodies in terms of price trading, right? Wicks and bodies, wicks just basically tell you how far, you know, price actually went before they got rejected. So there are different cases, right, where a candlestick can have a small body and a super big wick. A candlestick can have a big body and a super small wick, right? And whether the body is at the bottom or the body is at the top, right, it means completely different things, right? Does the body represent what does the shadow represent? Okay, now the body just so we have Gerard asking, what does the body represent? All you need to know is you don't need to confuse, you don't need to complicate things, right? The body just tells you whether the open price is the close price was higher than the open price, or was the close price lower than the open price. So whether the charts were going up or the charts were going down. That's all you need to know about candlestick, the body of the candlestick. What is way more important than the candlestick? What is way more important than understanding this candlestick is knowing how to apply it, right? And this is where we'll be jumping into it. Okay. Okay. Now, Talha, yes, you want to learn a strategy with no loss, right? Talha, that's a very ambitious thing, right? And just that approach itself, I can tell you that you will not succeed if you look for a strategy with no loss. Instead, what you're looking for is a strategy which has more wins than losses. Okay, there is no strategy out there in the world where there is no loss, right? It's that I can assure you. People use martingale strategies and they blow up, right? So if you're looking for a strategy with no loss, I can assure you that I cannot teach you that today. But what I can teach you is along the lines of a strategy with more wins than losses. That's what you want in trading, right? There's always a good balance of risk to reward. Okay, it's all a game of probability, Talhar. All right. Now, price action trading approach. Let me. Okay, we got a question from Kui asking if a fat body indicates bigger trading volume. Not entirely necessary, right? Not entirely necessary. A fat body means that there are more people. Not say fat body, but the bigger a candle is, right? So your question is, right? Your question is that if there's a fat body here, right, with little wicks, does it mean that there is more volume than a candlestick that is like this? They might both be the same height. Okay, what does everyone think, right? Does this candlestick have more volume than this candlestick? Yes or no? Guys, you need to participate with me. Just answer. Try to answer the question, and when you answer the question, you know, it puts you through the thinking process, which is very important when it comes to trading. Jared says same volume but less volatility. Price action. Yes, no, no, just more bias, right? So then, I didn't say if this is a bullish or bearish candle, so it doesn't mean that it's more bias, right? I see some people saying same. I see some people saying yes. That is absolutely not true. what this means is basically there were more buyers than sellers. In this case, it means that the number of buyers and sellers were almost equal to each other. That's all you need to know about the candlestick, right? It's not a good indication of how much volume there is. And usually in trading, in Forex at least, volume is a little bit harder to measure, right? Okay, so this is why if this was an open price and this was a closed price, right? That means there were more buyers than sellers, right? So that is why you need to understand about the candlestick patterns, right? It doesn't mean there's more volume. Okay. Now let's go on to let's go on to price action trading approach. Hey guys, can you hear me now? Okay. Wow. Hey, thanks for telling me. Thanks for telling me that my voice disappeared. Okay, now let's back to rock and roll. Okay, now so there are only two styles of trading, right? One is the reversal, right? One is where you're trying to play a reversal. One is where you're trying to play a breakout. Okay, there are a few different permutations to this, but essentially, right, in trading, especially candlestick patterns, these are two of the more useful ways you can use to trade, right? Reversals and breakouts. And today I'll be showing you how we can do that, okay, along with some examples. All right, so a reversal basically means that whether you're playing a reversal from here downwards or you're playing a reversal from here upwards, right? That means you're playing the drop or you're playing the bounce. Breakouts mean that there's a clear level of resistance like over here, and then you're trying to play the breakout from here or you're trying to play the breakout from there. Okay, so today we'll be looking at these two kinds of approaches to trading, right? Which I personally like a lot. Okay, let me show you this. So this is a channel. Okay, this is a channel, and we're going to see how just an example of how a reversal style of trading can work. Okay, now just let me open this slightly bigger so I can see something. Okay, so from here, right, when price comes to here, what do you think? What do you think is going to happen when price comes to this level down to here? When price comes to here, how many of you are going to play upwards? How many of you are going to play the breakout? Guys? Okay, we got Xiang Chao saying that he's going to play a bounce, Gerard up. Milan saying he's going to wait for the confirmation. Interesting move. Right, bounce upwards, 50-50. Sell stop order below the channel. Wait till I see which way. It could reverse, to support. Right, wait for the pattern. Right, so many of you guys have different answers. Right, wait for confirmation, wait for pattern, need to see. Right, what I think. Okay, we got actually quite a few people saying wait for confirmation, and that is what when it comes to price action trading, that is what I would that is the approach that people take, right? A channel itself, right, as tempting as it may be to just trade a channel itself over here, right? As tempting as it may be, right? When it comes to price action trading, right, it's all about being patient and waiting for the action to happen, right? So remember, price action means that you need to wait for the action to happen. So when price comes down here, what we'll be doing is that if we decide to play the bounce straight away, right, it's okay for us to have a bias to think that, okay, price might bounce from here. There's a very nice channel and there's a probability that price might bounce from here. But whether we play that move or not, we need to have the more probability stacking in our favor, right? Because remember what I mentioned to you guys previously, when it comes to trading, right? When it comes to trading, it's all about stacking probabilities, right? You got a channel, right? A channel could give you a 40% chance of getting this correct. Maybe if stochastic, right? If stochastic is also at a overbought zone, right? Maybe you have another 10%, right? Maybe if you add in price action, you have another 15%, right? Maybe if you add in an Ichimoku cloud, you have another 10%, right? So trading by the channel alone would not, would kind of just put you with a 40% probability of so-called getting it right. What you always want to do is to kind of stack it up in your favor, right? You add another 10% here with stochastic, another 15% with price action, another 10% with the Ichimoku, right? And the more you stack up, go from 40 to 50 to 60 to 75% chance of getting this move correct, right? So that's what I call a high probability reversal zone, right? It means that you are finding everything that lines up together to get the bounce from here. Okay, so that is the approach to trading, right? You need to stack the probability in your favor. Trading is all math. It's all a game of probability, right? It's the better your probabilities, right? And the more you use it, the higher chance you can be profitable over the long run, right? So what happens here is that we have a very nice little morning star kind of formation, right? You can see a morning star formation form over here. We'll be going into how the morning star formations look later, right? But as you can see, right, you can see there are very strong wicks. That means there's a lot of indecision around here. There's this formation that confirms it, and from here, right, price did take off, right? And even if any of you guys recognize this pattern over here, this is like I think it's a 3 white soldiers kind of pattern from a candlestick pattern. Right, so that's why it kind of broke past this resistance area. But we'll talk about like setting your take profit target and stop loss levels in the next webinar, right? In this webinar, we talk about a more slightly more towards the entry, right? Focusing on the entry. Oh, sorry. Yeah. So in this case, you can see, right, when price reaches down here, very nice morning star formation, and it reversed from there, right? But of course, trading is not as simple as this. Right, and I do want to show you that on top of the reversal, what I mentioned previously is called the breakout. Right, so the breakout, as you can see, what I mentioned previously is that this is like an overlap kind of resistance. You can see many times price is testing this level. So this is clearly like some kind of it's what we call overlap resistance. And if we are trying to play the breakout, means that we are trying to go beyond this level. Okay, we're trying to go beyond this level. Many people might think that they want to play the reversal from here, right? But in this case, right, we need to see what price action tells us and to determine from there whether we should play a breakout or we should play a reversal. Okay, so let's go through this example here. Who knows what this pattern is? Can anyone take a guess? Is it 3 blind mice? I don't know. 3 white soldiers, 3 black crows, 3 green soldiers. I have no idea. Double bottom? Nah, I wouldn't really call it a double bottom. Technically, if you look at here, yes, a double bottom, but what we're looking for is right over here. Reverse head and shoulders be forming. Not really. I wouldn't say so. Maybe in the bigger picture, it might be, right? But guys, remember that what they're looking for is the candlestick formation right over here, right? It could with candlestick patterns. If you look at, I mean, with chart patterns, right? Depending on how you look at it, right? You could have something. You could have a some sort of I wouldn't even call it head and shoulders unless this guy has a severely deformed head and a severely deformed shoulder or something, right? Man, I wouldn't call it head and shoulders, man, right? But most people got it right. It's 3 white soldiers, right? White soldier number 1, white soldier number 2, white soldier number 3. So 3 white soldiers are particularly good when you're looking at them for breakouts, right? Because it shows that there's strong momentum. You could use them for reversals, right? You could use them for reversals, but they are particularly useful when you want to break out, right? Because when you want to play a breakout, you want a strong army, so to speak, right? You want momentum on your side, right? You don't want a small little candlestick here and hoping and not wondering whether you'll be able to break out or not. So the good thing about 3 white soldiers is that it brings along an army of 3, right? It brings along an army of 3. Right, and that shows that there is like good momentum to take it beyond this resistance level that we're seeing, right? So one of the more useful candlestick patterns for breakouts would be the 3 white soldiers. The best entry point for Zion. Zion is asking what's the best entry point here, right? Usually I will wait for the confirmation. So in this case, once it is confirmed here, an aggressive approach will have you taking the entry right over here, right? A conservative approach will wait for the pullback to this level before taking off, right? So depending on your approach, right, whether you want the aggressive way or the conservative, or you can split your position into half your position is aggressive, half your position is conservative, right? So what happened from here after that is, yeah, it is the 3 white soldiers. And you can see from there, if you took an aggressive approach, that will worked out quite well, right? And you can see price start to rocket on from there, right? So Gerard's asking, how do you split your position in MT4? Well, you don't, right? Instead, what you do is you open 2 positions, two trading positions, and you just use half the lot size for each one of them, right? So I mean, we have. In the last webinar, we have this awesome ultimate trade manager, right, which will be able to help you scale in your positions and stuff, take partial profits and all, but we don't have it. The native MT4 does not have it. So if you want to take like half your positions, what you can do is you can take half your position first at your aggressive entry, and another half position if you think that it might come back down and retest. Okay. Yeah, but the business that's the top. I have to close above the high of the previous false breakout. Okay. So Steve asked a very good question, right? Steve asked a very good question, right? Is that does the third white soldier, this one over here, does it have to close above the high of the previous false breakout? So these are the false breakouts over here. Okay. So there are 2 ways of looking at support and resistance, right? Support and resistance, one is the area, right, that you're looking at. So as long as it closes above the area is good. It is even better if they are able to close above this the high of the previous false breakout. And it is exactly correct, Steve. Philip is asking whether does time frame matter, right? Time frame matters, right? Time frame matters, especially when you're looking at price action, right? When you're looking at the 5-minute chart, not enough people are in there looking at it with you, right? The amount of decision making that goes into just a 5-minute candle is too little to really kind of, I feel, affect the markets that much. What you want to go for at least is the 1-hour chart, right? I think that the 1-hour chart will filter out a lot of noise when you're trading price action, because a few things you want to do is you want to use the common time frames, because price action works best when everyone is looking at it together, right? The most used time frame in the world is the H1 time frame, right? Not many people use the M1, not many people use the M5 or even the M15, right? Because these are more for intraday traders who have a lot of time. A lot of people use the H1, H4, and the D1. The sweet spot is actually H4 charts for price action. They work really well, okay? But if if it's moving too slowly, you can go as low as H1 or if you don't have that much time every day and you're monitoring maybe 30 different charts, you can look at the D1 charts instead. The higher time frame it goes, it is usually better when it comes to price action. Okay, now let's go on to the next part. My top, I've made more profits on the H4 than on D1, right? So that is true, So that is good news. That is good news, Gerard, to know that you made more profits on the H4 than on the D1, right? Sometimes it can be a case of the what kind of style suits your trading strategy better or your trading approach, right? So people who trade the D1s, they usually only look at it once a week, right? And they don't have that much time, but they still appreciate it that they have enough time in a week to kind of just look at the charts. People who can at least look at the charts for 1 hour a day or so, right, find that the H4 charts tend to be the best for them, right? Kui is asking, what does H stand for? I'm sorry, but I forgot to tell you this, but yeah, H stands for hour. Yeah, so you're looking at the 1 hour chart, or in this case, when you look at MT4 over here, right, you can look at the 4 hour chart, you can look at the 1 hour chart, the day one chart, right? You can see this is a 30-minute chart. So that's what the H means. Okay. Now let's move on to my top three favorite single candlestick patterns. Okay. Now one of my favorite has to be the hammer. Oh, wrong. I need to pick the highlighter. Yeah. One of my favorite has to be the hammer and the hanging man, right? The hanging man is what you find on the top of a trend before you see a reversal, and the hammer is what you see at the bottom of a trend before you see a reversal. Okay, D stands for day, right? Umana, right? D stands for day. So D1 means equals each candle you see is equivalent to 1 day over there. Okay, now guys, when you see a hammer pattern and a candle and a hanging man pattern, how many of you guys wait for the confirmation candle over here, right? Can you guys share with me how many of you wait for a confirmation candle after you see the pattern? Can you please type your answers while I rush off to the toilet real quick? Hey guys, I'm back. Wow, I see a lot of answers from you guys. Yeah, so I'll be taking a few toilet breaks today because I'm drinking a lot of water. I'm actually trying to recover from a sore throat. So yeah, just drinking a lot of water. Okay, we got to see a lot of people saying that they do wait for confirmation, right? Wait for confirmation. Some don't. Breaking the high of the hammer bar. Okay. Interesting. Breaking the high of the hammer bar and wait to check the candle, wait for confirmation, never be too sure. At the closing, wait for price to break the highest point of the hammer. So actually we got a couple of people saying that they wait for price to break the high of the hammer before taking the trade. Okay, so that's like a mini confirmation kind of thing, right? Use it together with volume. Okay, James is saying that use it together with volume to give you more confidence. No, so Muran, you're asking if other participants can see other people's answers. No, they can't. Okay, right? Only I can see all your answers. So don't worry. Whatever you're typing to me, I can see, but no one else can see. All right, so we got the majority of people saying that in one way or another, whether here or waiting for the entire candle to form, right? They do wait for a confirmation, right? I think usually when it comes to such patterns, if you are waiting for a candlestick formation confirmation, you are essentially trading something like a 3 candlestick pattern. If you think about it, right? You're trading a 3 candlestick pattern now. Personally, I think it's a good idea to wait for confirmation. Okay, because there are many times where just a pattern itself is not a single candlestick is not enough to tell you whether the trade is going to be in your favor. Of course, right? If you're taking a more aggressive approach, the moment a candlestick occurs, instead of getting in over here, you can choose to get in right away, right? And it's not entirely a bad thing, depending on how many other probabilities you have added up in your favor, right? So remember, trading is all about probabilities, like I mentioned again. So if a hammer candlestick has happened, and at the same time you see maybe like you already see 6 other reasons to take the trade, then you might not need to wait for the confirmation before you take a trade, right? You can get in on the trade straight away, right? But if you only have maybe like you have a support line and you see you see a candlestick formation, right? You might have a low probability of this trade working out in your favor. So having a confirmation would help you, right? To for it to be slightly more effective. Okay. Now, is it important to have the confirmation market still reverses part confirmation? So Duni is asking, yes, if the confirmation happens, is there a chance that the market will still reverse, right? Absolutely yes, right? The markets do not care how whether you waited for the confirmation or not, right? The market, the market doesn't care what we think. Instead, right? How we need to approach the market when coming to trade is in terms of probability, right? Out of 10 times, we might, if we wait for confirmation, we might get it right maybe 7 out of 10 times, right? If we don't wait for a confirmation, we might get it right only 5 out of 10 times, right? So it's all a game of probability. Of course, when you get in here, there comes the next question, right? You're getting in at a price that is not as good as getting in over here, right? So how are you going to adjust your stop loss? Where you're going to put your take profit, right? Is very different when you manage to get in at a better price. So that is how trading strategies are derived, right? A trading strategy is not only about your entry, right? It's about your entry, your stop loss, and your take profit, okay? And everything else that happens in between, right? Brian is asking where can you get the indicator, right? I'll be sharing with you guys at the end of this webinar, right? How you can get exclusive access to the indicator, right? It's it's not released to the public yet. I just built it, so you won't be able to find it anywhere out there. But we have a special arrangement with XC so that you can get an exclusive access to it. Milan is asking what's my favorite candlestick pattern, and if you see that, it'll probably get higher with the trade working out because a lot of pros are watching this, right? What's my favorite candlestick pattern? I'll be sharing with you guys later what my favorite candlestick pattern is. Hammers, I really like the hammer formation if you wait for the confirmation. But one of my favorite, right? One of my favorite has to be the tweezer top, the tweezer bottoms, and the gravestone dojis, the gravestone and dragonfly dojis, right? Taoha, yes, we are recording this, I think, right? So sooner or later it'll be available to you guys. I think at the end of the entire at the end of probably next week it'll be available to you guys. All right. So yeah, you can access the recordings. Now, top 3 single candlestick patterns. The second one is the inverted hammer and the shooting star. They are in some senses similar to the hammer, and they're just flipping it around. If you look at it, sorry. Oh, where am I? Oh yeah, like that. Yeah, you notice it's a hammer and it's just flipped around, and the shooting star like here. Personally, between the two of these, the one I like slightly more is this, it's a shooting star. Because you need to imagine the psychology behind this, right? This is what happened. Price open over here. You must follow me on this journey, okay? Price open over here. The bulls came in and they pushed price all the way up, right? They pushed price all the way up to here, and they're like, oh yeah, we're gonna take this, you know, on a massive bullish run. What happened is that the bears came in and it pushed it all the way down, not only to the current level over here, but it pushed it even further down to close off over here. So the bulls had the chance to really take this off to the next level, but they were overturned by the bears, and not only did the bears bring them back to their starting spot, but they pushed them down even further. That is why this shooting star formation is one of my favorite ones, right? Yeah, it's one of my favorite ones. Okay. Similar to the hammer in this case, right? The hammer, between the two of them, I like the hammer a little bit more, because the hammer actually tells me that price opened over here. Okay, the bears push it all the way down. They were thinking that they're just gonna, you know, hammer the bulls. No pun intended there. Actually, pun was intended. Sorry, right? And the bulls overtook them, right? And not only brought them back to where they started, but pushed them up even further to close higher than that. So that is the strength of a hammer, right? So this formation, the hammer formation for bullish reversals, and the shooting star for bearish reversals are some of my favorites, right? These are some of my favorites. I don't really like the inverted hammer, and I don't really like the hanging man, right? So you have to pick between few. Those would be the ones I'll be looking out for. And the last one is the Dragonfly Doji and the Gravestone Doji. These are usually characterized by having almost no body, right? There's no body over here, right? So the bulls and bears kind of meet. You know, they had a huge fight. The bears, you know, it opened over here. The bears push it all the way down. They're like, you know, you're gonna win this fight. But then the bulls push it all the way back up, and then it came back to here, right? The same for the Gravestone Doji too, right? It happens on the top of a trend, right? In these cases, I really like them, but what I'll do is I usually wait for a confirmation candle, okay? Because it shows there's a lot of indecision here, right? Nothing is decided. So I would usually wait for a confirmation candle over here. So Steve is asking, for the shooting star, is it important to have the gap between the closing price of the previous bar and the opening price of the shooting star? Absolutely no. The reason for that is Steve is asking, like, for this shooting star formation, is it important to have like a gap over here and the gap and stuff like that? If you're trading equities, or you're trading on the daily time frame or the weekly time frame, it might be possible. But when you're trading forex, this is rarely the case. You rarely ever see any big gaps in forex, right? So you don't need to worry about it when you're trading forex. Don't worry about the gaps, because you'll hardly ever be able to find a gap in forex. Okay. Sound is gone or weird now. Is my sound funny to you guys? How about now? Is it okay now? Okay. Thanks for telling me, guys. You guys are super awesome. You know, you just tell me anytime something happens, right? Thank you. All right. Yeah, I have a proper microphone here. Just that it seems like my cat might have chewed on the wire a little bit too much, so sometimes you get a little bit glitchy. Yeah. Okay, so this is the Gravestone Doji. So that covers 3 of my favorite single candlestick patterns, which I like the most, right? The double candlestick patterns, right? We go for the engulfing. Now, the engulfing candles are very useful, right? If the previous candle was big and the next candle was even bigger, okay? What I don't want to see is engulfing candles that look like crap. I mean engulfing candles that don't look nice, right? What I mean by that is, let me try to find an example here for you guys, right? Let me just remove my indicators and stuff. Okay, let's try to look for, oh, the sound is gone again. Can you guys hear me? Oh, it's back. Okay. Okay, that's good. That's good. All right, just keep me updated if it suddenly disappears. I'll try not to touch my mic anymore. Right. Okay, for engulfing candles, the wick is very important. Okay. Let me see for an engulfing candle. Let's go through this together. Okay. Do you think this engulfing candle is good? How many of you think this is a good engulfing candle? Okay, I see Edwin says it's not, Ruben says it's not really, right? Can you share with me why? Some are not sure about it, right? Some say yes, right? So, okay, now, what about this engulfing candle? Is it nice? Is it good or is it bad? It's better, some say it's good, some say it's bad, good. Okay, looks like a bad one. Okay, now, for me, both of them are kind of bad. Yeah, both of them are kind of bad. Even though they might have resulted in prices going up, right? But this is hindsight bias. Okay, for a good engulfing, right? The second candle, right? The second candle usually needs to have as little a wick as possible. Right, the second candle needs to have as little a wick as possible. The reason for that is because the psychology behind it is that the bears take over here. No, I mean the bulls take over here, right? It doesn't even allow the bears to push it down a little bit, right? The wick just lets you know, right? You must follow me on this story, right? The bulls don't even allow the bears to go down, far down or something, right? It doesn't even give them a chance to breathe, right? They take over, they smash the bears, and they straight away start pushing it up, right? Straight away start pushing it up, right? And there is very, and when it ends over here, it is not like there's a long week over here where there was a lot of fighting happening and it coming all the way down, right? It's that the bears hardly have any chance to fight over here to push it down further, right? So engulfing candles usually are characterized by having small little wicks at the top and the bottom. Even better is if they don't have any wicks at all, right? So the smaller the wicks, the stronger an engulfing candle is, right? This would be what I consider as a pretty good engulfing candle, right? Not so much because of this little bit of a wick over here, but look at the way it closed at the top, right? It hardly gave the bears any chance to fight, to take over. And one thing to take note of is that engulfing, right? When you are considering engulfing, right, the previous candle has to be big enough to be considered a nice fight. This is a nice engulfing, right? But this is not an engulfing, right? And the problem with many indicators out there is that they have a simple rule where, if the open and close is higher than the current bar open and close is higher than the previous bar open and close, they consider it an engulfing. But that is not the case, because you need, this is nothing. This is just like any other candle that occurs anywhere, in the trade, right? This is not an engulfing candle. No one cares about that tiny little candle down there, right? What is important is to factor in the size of the fight that is going to happen, right? The previous bar needs to be big. The next engulfing candle needs to be bigger, right? So that's an important thing about engulfing candles. It's a two candlestick formation, right? So you need to look at the previous bar, previous candle, and you need to look at the current candle. And always look at, it needs to be a big enough fight. It cannot be something tiny down here or something. You cannot look at this and say, oh wow, this is an engulfing candle, right? That is nothing. No, no one would consider that. Okay. So now I got questions. What has long? Okay. I think Jared's asking, what's the first candle has long a long wick? I assume if the first candle has a long wick, right? If the first candle has a long wick, right, and the second candle is like this, theoretically it's an engulfing candle. It works, right? But if you're talking about just my personal opinion, I would usually hope to see an engulfing candle even go beyond the highs of the even go if we're looking for a reversal over here. I'm hoping to see go beyond the high of this level, because clearly, if you think about it from a psychological point of view, right? You think about it from a psychological point of view, what we're looking for is this level was not able to be, the bulls were not able to cross this level previously. That is why there's a shadow over here, okay? Right? It's because the bulls were not able to break past this. So an engulfing candle that closes beyond that tells me that this previous resistance that they face has been, overthrown by the bulls. All right, so that is definitely a big consideration. So back to your question, Gerard, if the first candle has long wicks, right, it'd be better if the engulfing candle closes above those long wicks, right? Richard, I can see that you're saying you're gonna deposit $1,000 to get all 3 indicators. Are there any videos to explain how to use these TFA indicators? Yes, there are. There'll be videos to explain to you how to use them. The toughest one to use would be this candlestick indicator. You know what? Just for everyone, I'll probably just create a Telegram group or something, so everyone can kind of exchange their ideas on how they're putting in different values here, and we can work together to create like the ultimate price action indicator. Maybe even have like 40 or 50 different kind of patterns. Okay, yeah, but I think that is something I'll probably need to do, given how intense this topic is, right? Okay. Can you answer the question on Tombstone and Dragonfly? I'm sorry, Milan. Let me go find your question again. So Milan asked the question saying, the Tombstone and Dragonfly have only 1 wick. What if they have 2 but no body? What is it that qualifies a Tombstone as a Dragonfly? Okay, so Milan is asking when it comes to our this kind of dragonfly and candlestick kind of formations, right? Like one over here and one over here, right? The way this works is that there should not be any body at the bottom, okay? Or should a minimum body at the bottom, minimum body at the top, right? Because if there's more of a body here, it becomes a doji, right? This is a different candlestick formation, right? So this just shows pure indecision that happens. Okay, this is slightly more bearish. It tried to go up and it went all the way down. This is slightly more bullish. It tried to go down and it was pushed all the way up. So this is a tombstone and this is a dragonfly. I think I can't remember the difference. So usually after a while, once you understand the anatomy of a candlestick and you know what this means, like for example, this means price tried to push all the way up. It got rejected very strongly, right? So that is what you're trying to look for. So this is a key level to look for, right? When you're trying to look for a breakout, right? And then true enough, you see price actually reverse and then bounce from there. So once you understand the psychology behind this kind of candlesticks, it helps you understand a lot better on how to trade them, right? And guys, my goodness, it is almost 1 hour is almost over, and we're not even halfway through our webinar. Let me move slightly faster. Okay, it's great to see that everyone is. In fact, we're getting more attendance throughout. Right, that's great. But bear with me. I'll try to cover as much as possible without rushing too much. My next favorite one is the tweezer bottom and the tweezer top. Right, that to me is a nice little formation you see, right? That signifies a rather high probability chance of a reversal, right? So the tweezer bottoms don't necessarily need to be in this proportion. It can be like this, the body can be smaller, right? But what I will try not to look for is I will try not to look for stuff like this, right? I will at least require the body, right? I'll at least require the body to be pretty close, okay? Right, at least half of the candle should be the body, right? These are actually one of my more favorite ones, right? Because it actually is a confirmation that is more or less built. Oh man, Dunia, I'm sorry, we need to finish this today. Extend the session because it's almost 5. Yeah, okay. You guys are asking if I can extend the session. I'll do my best to continue talking as much as possible. Dunia, I'm sorry if I know you need to head off soon. But yeah, but don't worry, there'll be a recording for it. We're just trying to go really in depth into here, right? I will try to continue as much as possible to cover this. I swear my sore throat really hurts now. Well, I'll do my best for you guys. Yeah. Okay. So what I like about tweezer bottom and tweezer top is that it kind of has a built-in confirmation for it, right? So this is something like a modified, okay, if you look at this, right, this is like a modified version of like a hammer, right? This could be, one of the candlesticks that we highlighted earlier, this would be the hammer formation, right? And if a hammer formation occurs, then this other one occurs, right? It is more or less like a built-in confirmation. And the nice thing about this is that price has not taken, the confirming candle is not like this, where price has, moved much further away and your entry is quite far away. Right, this kind of tweezer bottoms and tweezer tops are nice because even if you get in here, right, it's still at a pretty nice price, right? It's still at a pretty nice price, and you don't need to wait for such a big confirmation, right? Okay, now I read Dragonfly pattern. Google pick up Dragonfly, and then it'll be pretty easy to see. Joyce is asking if the tweezer tops and tweezer bottoms are the same as double tops. In some way, yes, they are, right? Different people might have different ways of describing them, right? But more or less, you just need to focus on how they look like. Okay. Now we'll go slightly further. I see a question from Edwin. Specifically for this, no, because I combine a lot of them together before I take a trade. Okay, Errol, I'll catch you around next time. Sorry that we're going so long for this, right? And now we move. Must their wick be the same height? Preferably. Preferably their wick be the same height. Okay, why the wick has to be the same height? The reason for that is because it shows us that the first time, right, in this case, the bears came in here and it pushed down. So people might be thinking, hey, you know what? It might not be true. Maybe it was like a false positive kind of thing, right? So what happens again when it opens and they decide to go and test it again? And at that exact same level, the bears come in and they kick it down again. So it tells them that, okay, this is not just some kind of false setup. There are really bears that are camping over here, ready to push the price down. Not only through one candle, but both candles that there are bears camping over here trying to push the price down. That's why usually when the wicks are the same height, that is the best. Okay. Now moving on to triple candlestick patterns, right? The morning star, evening star formations. You won't be able to get it exactly the same in Forex because there will not be a gap, right? There will not be a gap as you see over here, right? But even without the gap, it can still work pretty well. What you're looking for is just a small little star, right? You're not looking for a big reversal, or a big hammer or inverse hammer or something like that. You're just looking for a small little star and then a confirming candle, right? So this is I don't need to explain much about this candlestick pattern. It's pretty straightforward, right? I personally prefer it if there's a bigger candlestick instead of the star. Okay, just my personal preference. Next one, 3 black crows and 3 white soldiers. You guys heard of it previously. You guys were able to identify it quite well previously. Personally, for me, this is better when you're trying to play a breakout, right? Not a reversal. The reason for that is because if you're trying to play a reversal, right, price will have climbed so far up already, right? That, you know, if you're waiting for the third white soldier to be done before you get into a trade, the price you're getting in at is not so good. It's not such a good level, right? The same thing as 3 black crows, you know, by the time the last crow is formed, right, price will have went so far away from your from the reversal that you were looking at over here that, you know, it might not be, your risk to reward of entering into this trade is quite low. So what I look for in 3 white soldiers and 3 black crows is what I shared previously, where, you know, maybe it helps you break past this key level over here, right? And that confirms, you know, a further move up from there. Okay, so that's how I would use the 3 black crows and 3 white soldiers. Not so much for reversals, more for breakouts, right? So we have Mr. Hess, who's asking where to enter on these setups, right? So if you're waiting for a confirmation here, you know, I'll wait if the 3 black crows really does help you break out of a key level, right? Then I will just aggressively, you can enter straight away. Otherwise, you can wait for the reversal. You can wait for the pullback to happen before going in. Okay, depending on your whether you're going a little bit more aggressive or not. Okay, Joyce is asking, you know, are these continuation patterns? In some sense, no, right? There is, you could call it continuation patterns because it's basically trying to tell you that it's going to continue upwards. But instead of labeling them in one way or another, right, just remember that 3 white soldiers, you want to ride the momentum of these 3 soldiers, right, to help you break out of a key level to continue going up further. The same as the 3 black crows, you're trying to ride the momentum of these 3 crows to help you break out of a key level, key support level, and to go further down. There are many ways to use this, and my personal preference is to use the 3 black crows and the 3 white soldiers as breakouts, not reversals. Okay. Okay. Now, the last one, you don't need to worry too much about it, but you see it pretty often, is the 3 inside up and 3 upside down, right? You just need to kind of just keep an eye out for it, right? These are pretty good reversals too, right? There'll be one big candle that occurs. There'll be one small candle that closes somewhere in between it. It has to be above the middle. And the last candle will need to close above it, right? So it's the same thing here. You know, you got one big candle here. The second candle closes slightly in the middle, and the last candle closes below. Honestly, it's quite hard to find this, but it's just one of those patterns that's worth kind of just keeping an eye out for, okay? Now, let's go into how we can combine this with what we have learned, right? So the first thing we're going to look at is how we can combine this with support and resistance, okay? So you can see over here, right? This was what I taught you guys on pullback resistance in the past. One of the beautiful things is that you can actually see how the candlestick formations were playing out, you know, at these areas where I'm circling them, right? So this pattern over here is more or less like I guess a morning star kind of thing. No, I'm not sure what this is. This little thing, dragonfly something. I'm I swear I'm so bad at that, right? This, I think it's a dragonfly, right? Yeah. This looks like a dragonfly over here, right? So dragonfly, and you wait for confirmation for it to go up further, okay? And it also happens to be at a key support level, right? So dragonfly formation at a key support level, and you wait for confirmation, allows you to kind of go up further. It might not happen all the time, but it kind of helps stack the probability and the odds in your favor. Now, you can see over here what I mean by the 3 black crows. 3 black crows are very useful in helping you break past this previous, you know, support level, right? And when the 3 black crows used to break past it, that's where you can play it down further. Okay, so yeah, there's a type and place to use each candlestick pattern. In this case, right, we you know, these are good for reversals, these are good for breakouts. Okay, just things to take note of, right? I'm just going to run through some examples here with you guys, right? Same thing for here, the pullback support. You can see that very nice little candlestick formations being formed over here, right? And when we come down to here, what we're going to look for is we're going to look for a candlestick formation, look for a bounce. Okay, Joyce just said my mic is off. Can you guys hear me? Oh yeah, you can hear me. No problem. Joyce, I think maybe your speaker is off. So be sure to check up on that. Okay. Now, okay, thanks for letting me know again, guys. Now, so not only combine with support and resistance, you can combine it with trend lines too, right? So you can see, as I shared with you guys previously, remember in our previous teaching, trend lines need 1, 2, and 3 to confirm a trend line, right? And when it comes down to here, right, you can see this nice little pattern that is formed over here, right? I think it's inverse hammer, a shooting star formation. I think it's a shooting star formation, right? One here, a shooting star and a confirming candle playing the move further down, right? And not only you do that, you don't only trade this every time you see it, right? Because I guarantee you, you're going to lose money if you do that. If you trade these kind of patterns every time you see it, right, you're going to lose, right? You need to combine it, right? In this case, we combine it with a trend line, right? We can combine it with support and resistance. Okay, we can combine it with Ichimoku. We can combine it with channels, but you need to combine it with something. Price action by itself cannot help you trade profitably, because there's not enough odds and probability that is stacked in your favor for you to trade well. And take it from a guy. I know there are many courses out there that say, oh, you know, just naked trading, price action, everything, you know, you can make money just trading price action. But take it from a guy who actually does it, right? And I can tell you that it doesn't hurt to have more probability stacked in your favor when it comes to trading. Okay. Now, so Flavio is asking, it works in which time frame, right? Personally, for me, if you're going to use price action to trade, right, try to at least look at the H1, preferably the H4 time frame. I find that it works best in the H4 time frame because a lot of people, a lot more people look at the H4 time frame than the H1 time frame, right? So the next thing I'll show is, of course, I can just show you guys what the I can show you guys what kind of patterns are being formed here, right? So this pattern here is the inside, three inside up or something. One big candle, followed by a candle that closed in the middle, followed by a candle that closed above, right? And then, you know, it goes up from there, right? This one is also three inside down. One candle, another candle, and a candle that closed below. But once you started to form that little channel, right? Once you start to form that little channel is where you can see when price reaches here, that is where you look for the kind of candlestick formations to happen around key levels, right? So you can not only use it for trend lines, you can use it for channels, right? You can use it for support and resistance. You can use it for Ichimoku clouds, right? It's the trick is combining them together, right? If you haven't got what I'm trying to say today, it is all about combining and getting high probability setups. Okay. Now, okay, yeah. I just want to show you here. One of my last examples. Is not only using. I showed you previously how we can combine stuff. In this case, right? In this case, we can see that this is what we call a pullback resistance. This pullback resistance, right? Price bounced off previously. You know, it finally came down and it pulled back to it. It also coincided with this little cloud over here, this Ichimoku cloud, showing that there is bearish momentum, right? So all you need to do now is to wait for a price. So you got one here, you got one, you got two things. So maybe the pullback itself is like a good 35%, right? The Ichimoku cloud might add a good 15% to your setup, right? So once you pull back, right, we can see what the candlestick formation was. I think it was if I clear it properly, it would be an engulfing candle. An engulfing candle, so you can add three things up together. Okay, you can add the pullback, you can add the Ichimoku cloud, and you can add the engulfing candle. 3 of it together, maybe you have 35% plus another 15%, plus maybe if it's a good engulfing candle, a good 20%. So that gives you a 70% chance of this setup working in your favor. It's all about combining probabilities, guys. Okay. Now, I've shown you guys how we can combine various things together. What I want you to do next, right, is please head over to this page, xc.trade/forex guide, and I actually wrote this ridiculously long price action playbook, right? I'll just copy this and send it over to you guys. Let me see how I can copy this. I'll send it to the link over here. Okay, right. So you guys can go there and you guys can download the ebook from there. Download the ebook from there. I think you need to sign up, and if you you can get all the different ebooks I wrote there, right? It will really help you prepare well for your trading, right? Yeah, really help you prepare well for your trading. Okay. Now, sorry, I digress a bit. I got a question from Ferry. What is your opinion about automated or robot trading? Would it be possible to implement indicators in codes and apply them continuously using real-time trading data? Yes, Ferry, I'm a big fan of automated trading. I actually built in some automated trading into my price action indicator, but I have not been able to combine it with like support resistance, Ichimoku cloud, and stuff like that. Although it's something which I'm trying to do, right? But yes, I'm a big fan of automated trading. I think it takes out a lot of the emotions when it comes to trading, right? The next, sorry, I just lost my page. Okay, now what you guys have been waiting for a long time, I guess, right, is how to get the TFA price action indicator for MT4, right? So if you don't have an account yet, please go open an account using this link specifically. Okay, it needs to be this link if you don't have an account already. I'm just going to paste it over here. Yeah, I'm just going to paste it over here. You guys can use that link. If you have an existing account, you just need to put in $250 US. You might have $10,000 in your account already, but as part of our agreement with XC, you still kind of need to put in an additional $250, right? You email service@xc.com and you tell them that you have this webinar offer, TFA price action indicator, right? You include your account number and we will send it to you and we will activate it, right? So the beauty about this indicator is that you get to customize you get to customize your criteria leading up to a candlestick pattern, right? So as you can see over here, yeah, Peter, yes, it is. So for each indicator that we are releasing, right, it needs a fresh deposit, right? So as you can see over here, this shooting star formation, I set a criteria that the previous 20 bars, these are 20 bars, the previous 20 bars need an ATR value of at least maybe ATR times 2. Yeah, times 2. The reason for that is because ATR is called average true range. Average true range helps you helps your indicator adapt in the market. Okay, I'm going a little bit technical here, so stop me if you get confused. Okay, a lot of people like to use how many pips. The previous 20 bars need to be at least what maybe it needs to be 10 pips or something, right? But that is not the case. You need to use ATR because the market moves and sometimes it gets more volatile, sometimes it gets less volatile, right? And the only way to filter that out is by using ATR, and you use a multiple of ATR. Okay, let me show you how it works. So in this case over here, right, we have dollar yen. We can create something, right, where I can say that I need for when the pattern occurs, I want there to have 30 previous candles, right, and the ATR needs to be at least 3. So these little blue boxes, you start to notice they'll get longer and higher. I click OK, right? So there you go, right? So as long as in the previous 30 candles, right, the price move this much, it is okay, right? So you can scroll back and you can see, right, in the past 30 candles, right? So from here to here, you can see it's 30 candles. Price needs to move this much distance, right? So you can see all the different setups that's occurring, right? You can go down to the, so you can easily adapt even if you go down to the 5-minute chart, right? You can see how you can, you found a shooting star formation here. You can even adapt if you go to the 30-minute chart, right? So you can see over here, it gets, I feel that the noise, right? Okay, in this case, you can see a shooting star formation here, nice move down. You can see that the higher the time frame, I feel that it is better in filtering out noises, right? So you can make it stricter or less strict based on this criteria itself, right? Based on how many candles and the ATR that you're using. Of course, we can scan for many different kind of patterns by, we can, I have to confess, I have not added in all the different patterns here yet. But yeah, you can actually add in many other different patterns here to scan for more different things, because adding in each pattern requires me to go through so many different explanations, right? I actually put it into a nice little slide for you guys, right, to explain like it's to kind of explain whether it is to kind of explain whether what each of these field means, okay? Whether you want to just use one candle, whether you want to use 2 candles, whether you want to use 3 candles, right? All of this it's a pretty big undertaking, right? So it's not going to be for everyone, but it's one of the best and most flexible indicators out there, guys. Okay. So we got a question from Lai Ching, right? There are a few indicators offered during this webinar series. Does each indicator require a separate deposit to get it, or one-time deposit? Right, each indicator requires a separate deposit, right? So that is our agreement with XC, right? So that when you put in a little bit more money, you get something new each week. It keeps it exciting. Okay. Now, okay. So I've more or less overshot once again. Yeah, I've overshot again. So you guys can we now have a bit of time for you guys to shoot me any questions you have. Right, now's the time where you can shoot me questions, and I'll do my best to answer you. Edwin, you're asking how can you reach me? You can just reach me. You can email service@xe.com, and if you have a question for me, you can direct it to them directly. If you go onto the Forex Army website, I'm also there, right? So you swing by, you'll be able to see it. I think I'm able to be connected via WhatsApp and Telegram there, so no problem. Stephen is asking if he has missed the previous webinar. Is there any way for him to watch them? Yes, it'll be uploaded on XC YouTube channel. Joe is asking, you can download the guide. You subscribe for it, and it will be sent to your email if I'm not wrong. TFA stands for the Forex Army. What is it? Peter is asking, what's the reason for specifying a minimum range of movement for the prior candles? Good question, right? So Peter is asking, right, why do we indicate over here? I think I can use this, it might be slightly clearer. Why do we indicate over here? Why must there be how many candles to the left before a formation occurs? That is because, right, if there is no indication, right, you might get cases like this, right? Like this looks like a hanging man, right? This looks like a hammer. This looks this looks like a doji, right? Imagine this doji happening at the bottom of a trend, right? You usually want to look for this thing at key reversal points, right? You want to look for it at the top of a trend. You want to look at it at the bottom of a trend, right? So how we figure out the trend over here is by determining the x-axis and the y-axis, right? That means the distance followed by the value, right? That way we can determine when we see the pattern that finally occurs, we know that there was a preceding formation that occurred that tells us that it is at the top of a trend and is a valid reversal. Okay. Now, I just want to thank you for your time helping me as a trader. Thank you, Milan. Your words are very encouraging to me. So Zadia, forex is tricky, right? Forex is tricky. It's if you go to the wrong people, you learn from wrong people, you will lose money. My personal advice is don't go for Instagram traders. What I mean by Instagram traders is those people in their Lamborghinis, they rent a car or something, right? And all they ever do is they take nice little pictures of them, you know, and they try to sell you a lifestyle. Those are people you want to avoid like the plague. Okay, stay away from Instagram traders. You know, look for verified kind of professionals that either have a very nice track record or are verified by a broker. So the reason why we work very closely with XC is because, you know, they have seen the way we trade. They've seen our firm. You know, we run a massive research firm providing for the biggest banks and brokers. And you don't just trust anyone with a nice Instagram account. Okay, so that is my advice to you. Right. So Zaria, where can you find legitimate verified teachers? Right, you can find them. One place you can find them is over here at XC. Right. In the last webinar, I'll be sharing with you about this community we have called the Trading Circle. We're going to do a nice little relaunch of it, where I will personally be at, along with my team, to guide you all to trade better. Okay. Which one will be the most random trade better? For John, can't get all the offers. I think that if I were to say, yeah, go for the trade manager, right? Go for the trade manager, right? And you have to pick one more, go for the price action indicator. Those would be, yeah, if you have to pick, right? And thank you very much, Saket, right? And okay, so now, well, we're here once again at the end, right? If you can just do me one favor, guys, right? Can you just leave a review whether 1:5, 1 being bad, yeah, 1 being bad and 5 being great, right? And as usual, don't worry, you know, no one else can see your vote. So if you vote 1, I will be upset, but I will not hunt you down, right? And then just add in 1 point on how I can improve, and I will always take your advice into heart, so that I can keep trying to improve my presentations for you guys, and you know, better deliver such webinars to you guys. Right. And yes, if you leave a 4 too, just tell me how I can get it to a 5. Right. Okay, Jared, I can see that you want it to be 2 or 3 hours. I guess we could do something like that in the future, where it becomes yeah, you know, it can be more like a live trading session. We are seeing people who are interested in live trading sessions. So if you guys, if at the end of it, I will ask you guys another question. Learning there attended your oh, that's nice, Richard. Yes, then you would know that they're pretty good at it. Thank you for the everyone's saying that they want it longer. Okay, guys. I just wonder, how many of you guys want live trading sessions? Like, not so much educational, but you know, we just jump in and look at the markets together. Is that something that will appeal to you guys? Okay, I got it, Edwin. Yes, live trading, absolutely, absolutely. Okay, all right. Live trader will be live trading. Wow, that is the holy grail of traders, right? Jumping in live and looking at a trading session live and looking at trades together. Of course, in a legally compliant way. You know, we're not recommending any trades, but okay, that might be something that we might do in the future, right? Yeah, I think that I'll be excited to do that, right? I can see your Joyce, your broker is XC. That's good. Okay. Okay, that is great. Thank you so much for staying all the way, guys. Right, you guys have been awesome, right? And I hope to see you guys next week, right? I hope to see you guys next week, where I'll be combining everything together, showing you how to put your stop loss and your take profit, trade management, exciting stuff. Okay, so thank you once again. Have a good weekend ahead, right? And peace out, guys. Take care. Joyce, I can't do 3 hours, but thanks for requesting that. Okay, bye guys, bye. Adios, adios amigos.